guys, it's Stock Curry, and in today's video, we're going to talk about the EV stocks that have been running up like crazy. I'm going to tell you how high I think they can go. We're also going to cover Shiba Inu, and I'm going to talk about PROG. So let's get into it. All right, let's start out with the market update. Now, if you take a look at the NASDAQ, and you look at the technicals in the NASDAQ, specifically I'm talking about the RSI, that's the Relative Strength Index. Any percentage over 70% points to overbought, meaning a stock, or in this case the market overall, would be overbought if the number is over 70 and due for some sort of pullback, either a dip or a correction or even a full-on bear market, some sort of pullback. Now, if you take a look at the NASDAQ, not only was the NASDAQ overbought on the daily chart, it is currently overbought on the weekly chart, and most importantly, it is overbought on the monthly chart. Further, if you go all the way back to the dot-com bubble, the run-up in the dot-com bubble was followed in the years 2000 and 2001 with an 18-month bear market, which caused the NASDAQ overall to drop over 50%. Now, here's the crazy thing. If you look at that run-up in the dot-com bubble and you compare it to the run-up today, the dot-com bubble run-up pales in comparison to the run-up that we're seeing right now. The run-up we're seeing right now is so much larger than the dot-com bubble is, which leads me to believe that at some point we are going to see a bear market that's even larger than we saw in 2000 and 2001. Now, I want to be very clear about something. The stock market has not had a true bear market since 2008. A lot of people look at the March 2000 drop in the market. It was over 50%, and they think, okay, there was the bear market. No, that was not a bear market. A bear market is a slow decline in the markets that lasts anywhere from 6 months to a year and a half. What we saw in March of 2020 was technically called a crash. That was a market crash. So the difference between the two is, while they both are a drop of more than 20%, a bear market is a prolonged drop in the markets lasting between 6 months to a year and a half. A crash, on the other hand, is a very rapid decline followed by an equally rapid recovery. And that's what we saw. We saw a very rapid decline in March, where March of 2020, the stock market dropped 50% in 1 month. And then it recovered in April and May. It literally recovered just as fast as it dropped. So that technically is a market crash. So YouTubers and other people that are saying, you know, we're not going to get a bear market because we just had one in 2020. You got to understand, we did not have a bear market in 2020. The last bear market was in 2008. So you had a bear market in 2001, a bear market in 2008. We're now all the way into 2021, getting into 2022. And a lot of people think 2022 is going to be the next bear market. Morgan Stanley is predicting a 6% decline in the market in 2022. Most of the analysts that I have seen are predicting anywhere from a 6% decline to a 2% gain. That is very different from the 12 to 13% gain that people were predicting for 2021. And there's a lot of factors that could tie into that. We have higher inflation, we have higher interest rates, we have the tapering, we have a possible slowdown in consumer spending, we have continued supply chain issues. There are a lot of problems that could rear their ugly head in 2022. Keep in mind that one of the only reasons the market was propped up so much in 2021 is because of the amount of money the Fed was dumping into the markets. Literally trillions and trillions of dollars have been pumped into the stock market in 2021, very artificially. Well, all that spending and all that money is over, and in 2022, we're going to get much back to a more normal market, a more fair value, if you will. So I posted this on Twitter earlier today, and quite a few of you came up and asked me, okay, what does this mean for the normal investor? What does this mean for you? How do you trade it? So here's the thing. In a bull market like we've seen throughout the past year, it's really easy to make money. I mean, you could just throw a dart at a dartboard and make money. You could just jump on Reddit, whatever everybody's pumping up, you buy it, you're up 100%. I mean, this has been, quite frankly, a gambler's paradise. where all these new investors think that it's normal to double your money in a week. And the fact is, it's just, that's not normal at all, not even close. And I think 2022 is going to be a big wake-up call to a lot of new investors as we get back to much more of a normal market. Unfortunately, I also think a lot of retail investors that jumped into the market in 2021 are going to get burned, and they're going to disappear, and we're never going to see them again. I have a strong feeling a lot of people watching this video probably aren't going to be investing in the market a year from now. There's an old saying that during a bull market, everybody's a genius because it's so easy to make money. And during a bear market, nobody has a clue what they're doing. I will tell you right now, I worked for a large investment bank during the 2008 financial crisis, and it was pure panic everywhere. Nobody could figure anything out. Our traders, who had been extremely successful, some of them lost so much money, they lost their licenses. People were getting laid off. Nobody knew how to trade in the market. Every single time you thought it was the bottom, the market just kept going lower. And the other problem is bear markets are extremely volatile, meaning you'll get 1 week where the market just skyrockets and you think, oh, cool, we're at the bottom, we're going to rebound. And then the next week it drops. And it's up and down day to day. And it's completely unpredictable. The bear market is probably the most difficult market to trade in. And I think we might get one next year. And so here's the thing. How should you play this? Now, the really simple, easy answer is you buy value stocks. That is, you buy stocks where the PE ratio is under 15. The problem is, if you look at the Shiller PE index right now, which is just basically a measure of the PE ratios of overall in the stock market, the PE ratios are the highest they have been since 1999, the last time we had a major bubble in the market. The other problem is maybe you say, okay, well, I'm just going to buy dividend stocks. Well, dividend yields are the lowest they've been since 1999, the last time we had a bubble in the market. And so you can't just buy a dividend stock and expect to do well, because most of the dividend stocks are only paying about 4% right now on average, where normally they'd be paying 10 or 11%. And so it's really hard to pick good value dividend stocks. They're just not there. More than likely, whatever amount you make in the dividend, you're going to lose in the drop in the share price. It's really hard to pick value stocks because PE ratios are through the roof right now. But there are a few categories where you can invest and do well. And in a video that I posted last month, I put out a video called My Top 15 Long-Term Hold Stocks. And these are all stocks that I felt had good valuations that would do extremely well in a bear market. And so I encourage you to go watch that video. I'm going to put a link to that video at the end of this video. I will have a link to my top 15 long-term hold stocks. Some of those stocks like CLF currently today have a forward PE ratio of 3.4. Keep in mind a fair PE ratio is 15. So it is extremely undervalued. Also, most banking stocks remain undervalued. A lot of the banking stocks, such as Citigroup, Bank of America, Goldman Sachs, they're running PE ratios of around 7 to 8, about half of where they should be. So banking stocks are a good one. A lot of the industrials are going to be good ones. Things like VALE and CLF and maybe some metal miners, things like that. So you got to think really conservative. Think boomer stocks, right? Boomer stocks. Your banking stocks, your consumer goods stocks, your manufacturing stocks, miners, just the basic boring stuff. Those are the things that you want to own during a bear market. The other thing you want to do is just hold cash. Now, it's really, really hard when you've used to just dumping money into anything and seeing your money go up. It's really, really hard just to sit on cash. Because like I said, bear markets last 6 months to 18 months, and you might have to sit on cash for a year and a half. Like literally, you might not end up buying anything till 2024. And it's really, really hard when you're used to just putting money into stuff and always investing to just sit there and do nothing. But that is honestly the best way you're going to make money over the next year or two, is by literally getting some really good long-term hold stocks that are undervalued right now and just letting them sit and doing nothing. Now, is a bear market coming right away? No, I don't think so. I think we're going to have more of this speculation, more of this run up through probably the first quarter of 2022. That's my guess, is we're probably going to see continued upward momentum, continued increases into the stratosphere on valuations for the next 6 months. But after the next 6 months, then I think we start to get into this. But definitely get it on your radar. Start to think about it. Start to think conservatively. Start researching some good value stocks that you can buy and hold and just forget about, because it's coming. It is coming. And when we start talking about the EV stocks today, you're going to see it's just plain as day why this major bubble is about to burst. And I'm going to show it to you guys in a few minutes. In fact, let's go ahead and get into our stock picks right now. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every day, I spend hours and hours watching YouTube videos, and then I consolidate all the stock picks from the top YouTubers, and I put them together into a single video. I give you both the cliff notes on their stock picks, as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. And if you're watching this on YouTube, next to the subscribed button, go ahead and click the bell icon and click all. That way you'll get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright, before we get into today's video, I just want to remind you that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any assets. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $100, Webull will send you 2 free stocks worth up to $2,300. Alright, let's get into today's stock and crypto picks. And first up is SHIB. This is Shiba Inu. Stockmo said that although SHIB is struggling right now, he thinks we'll see some upward movement once more platforms add the token. Larry Jones said there is nothing wrong with SHIB and that it's just going down with the overall crypto market. All cryptocurrencies are dropping right now. As of the recording of this video, SHIB is well below 4 zeros and a 5, and I stand by my prediction that SHIB will eventually drop down to 4 zeros and a 3 before bottoming out. Larry Jones said he is not doing any profit taking right now. He's just waiting to see how low it goes so that he can figure out when to buy more. Now, in some positive news, Keenan Grates let us know that SHIB officially burned millions of coins last night during their burn party. It wasn't a huge amount, but every little bit helps, and the burn can be verified on Etherscan. Alright, now on to our stock picks, and first up is FSR. This is Fisker. They're a car company getting into EVs. FSR is releasing their EV on Wednesday, and the share prices continue to run up higher in anticipation of the event. FSR is now 81 on the RSI, and I strongly believe that this will end up being a buy the hype, sell the news event. I would be very comfortable buying put options in FSR on Wednesday, especially after it ran up another 10% on Tuesday. Now, if you were one of the people that bought that strangle or straddle yesterday as I was talking about, now would be a good time to sell the call option and hold on to the put option. Keep in mind that deliveries are still quite a ways away. Now, some news that nobody else is talking about is that FSR had a sneak peek event on Tuesday, and at that event, the CEO announced an agreement to provide police and fire vehicles for Manhattan Beach, California. So not only does FSR have consumer reservations, they now have government contracts as well. And next up is LCID. This is Lucid Group, and they're an American EV manufacturer. On Tuesday, LCID became more valuable than Ford. At the same time, RIVN became the third most valuable car company just behind Tesla and Toyota, despite reporting $0 in revenue last quarter. I'm going to tell you right now that this is unsustainable. At some point, these EV stocks are going to crash, and they are going to crash hard. Right now, this run-up in EV stocks is very similar to the dot-com stock run-up we saw in 1999. I think 2022 is going to be a wake-up call for a lot of investors. I think 2022 and 2023 could be for EV stocks what 2000 and 2001 was for dot-com stocks. We are going to see significant decreases in these stock prices, possibly by as much as 80%. So be warned that this bullishness will not last forever. Eventually, these EV stocks will come back down to reality. And when that happens, a lot of people are going to get hurt. I'm not saying to go out and sell all of your EV stocks right now. I'm just getting this on your radar so that you can see how ridiculous these valuations are, and you can be aware that these EV stocks are going to drop in price at some point. Now, regarding LCID in the short term, it is overbought with the RSI closing Tuesday at 80. I think the share price will rise again on Wednesday, and I think the RSI will hit 85 before the share price comes back down. If I were still holding the stock, I would be selling on Wednesday. And next up is PROG. This is Progenity. PROG was up 40% on Tuesday, and it was up another 6% after hours. I missed the run up on PROG, but ZipTrader did not. ZipTrader alerted PROG in a ZipTrader U morning briefing Monday before the market opened. ZipTrader's morning briefings come out 30 minutes before the market opens each trading day. By the way, if you want access to ZipTrader's morning briefings, they are included free for life as part of a ZipTrader U course. If you want to check out the ZipTrader U course, I have a link for it in the description of this video. Now, looking into the next few days, ZipTrader thinks PROG has a much better chance of skyrocketing higher this time than it did the last time it hit $6.46. Whether or not PROG continues higher will depend upon whether or not retail traders continue to buy the stock. ZipTrader recommends taking profits, especially your initial investment, and then just letting the house money ride. Next up is TSLA. This is Tesla, and they're an American EV manufacturer. Tom Nash let us know that Tesla and Elon Musk are being sued by JP Morgan. Some time ago, JP Morgan purchased warrants from Tesla. At the same time, JP Morgan shorted Tesla. Now, where things get complicated is that JP Morgan had an agreement in the warrant contract to where they could lower the strike price if there was a significant merger and acquisition event. So when Elon Musk tweeted that he was going to take the company private, JP Morgan lowered the strike price of their warrants from $550 down to $480. Now that those warrants have been exercised, Tesla has only agreed to pay the difference between the current share price and $550 rather than the current share price and $480. Tesla is arguing that the warrant price should have remained $550 because the company was not actually taken private. JP Morgan is arguing that the warrant price should be the $480 that was agreed upon. Now, in the end, Tom Nash thinks this will probably settle for around $50 or $60 million, which is nothing for TSLA. Tom Nash thinks Tesla will settle quickly just to get this lawsuit over with. And last up is TTCF. This is Tattooed Chef. They are a plant-based foods company. Jeremy with Financial Education let us know that about 1 hour before the market closed, the TTCF earnings numbers were released prematurely. As a result, the stock dropped over 6% in less than 10 minutes. Now, this happened once before about 9 years ago with Google. When the Google numbers were released prematurely, trading was halted until Google could do their earnings call. In this case, though, TTCF was allowed to continue trading. Now, the stock recovered a little bit from the low, and then it ran up another 1.7% after hours. Overall, TTCF saw 44% revenue growth. That is good, but slightly below expectations. Earnings per share were also below expectations. So growth looks to be a little bit slower than expected, but still strong. Technically, TTCF is back down to a strong support level of $16. While TTCF is technically a falling knife, given the fact that TTCF is at strong support level, combined with the fact that it is oversold on the RSI, I would be very comfortable buying in here. Jeremy with Financial Education did take the opportunity to buy more shares, and his fill price was $15.44. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And I want to let you know that I've started a new channel where I'm going to be posting some general financial advice. I'm also going to be telling my story on how I overcame homelessness and $250,000 in debt to get to where I am today. Also, I'm going to be interviewing some really successful people over on that channel, including a guy who sold a rock for $1,000. We're going to talk about some people who've 10x their portfolios, and I've just got a lot of great information for you guys. So make sure you go subscribe to that channel. I'll be uploading my first video very soon here. The YouTube channel for that is youtube.com/ScottCurryShow. It's youtube.com/ScottCurryShow. And if you are wondering about whether or not I have a Discord, I don't personally have a Discord, but there is a really, really good one that I recommend that I am a member of, and that is called Lucrum Investing. Lucrum Investing has 60 other analysts just like myself, and they cover everything from stocks, options, cryptos, futures, you name it. So I have a link for Lucrum Investing Discord down in the description of this video. It's scottcurry.me/Discord. The other thing is, if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. And when you sign up for Webull using my link in the description below and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. Now, if you're not a U.S. resident, or if you like to trade OTC penny stocks, or if you just don't like payment for order flow, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the world. Trades start at just $1 US, $1 Canadian dollar, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, finally, I want to remind you guys, hit that like button, subscribe, click the bell icon, click all, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.